Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Let's take a look again on the gold market. In general, the first part of our trading plan that we discussed in the weekly report is done. So market has dropped precisely to the 1950 area that we discussed, and where it was support area and the COP target on the intraday charts, and even has dropped slightly lower below this area. So here we could discuss the possible position taking. In general, we have a few options how to deal with the current situation. It mostly depends on what you are watching for. If you would like to make the bet on the potential butterfly that we talked about this here, this market's forming triangle, that's the point where you probably have to make the decision, because take a look what we have on the 4-day frame chart. Market stands inside of the triangle. That is invalidation point of the potential upside butterfly that could start. This is really great point from the shape of the butterfly for position taking, because your stop has to be just below the A point. But I even suggest that you could place it even slightly below this area, just because with the most probable situation, market has to stay above these lows to start the forming of the butterfly. If it will drop below it, this significantly decreases the chances that the butterfly will be formed, and it will be more chances that we will get kind of the ABCD down. So the triangle will be broken. So in fact, here's market stands at the point that where the destiny of the potential butterfly will be decided. And from that standpoint, that is optimal area for making decision for those who would like to trade the butterfly. Here we also have a hint on the possible bullish hidden divergence. Yes, we do not have yet the crossing of the MACD. It still stands bearish. So that's why the divergence has not been confirmed yet. But if this will happen and market starts up prediction and this will be crossing, we also will get the hidden bullish divergence, suggesting taking out of the stop. And that will be great background for a possible butterfly. So risk here stands relatively small. On the hourly chart, you could see that market stands in a minor retracement. The hourly trend has turned bullish as well. So you could take position, for instance, and place stop slightly below this area. To keep the butterfly trading pure, you could actually place stop below these lows. There is a difference. It's a bit more risk, but that choice is up to you. What is the second option? What another option exists? On a daily chart, you could wait, for instance, for some flirting or fluctuation around the support area, and that will be mostly the bet on the possible downside ABCD, because what we could get, take a look, our sold stands relatively close on the daily chart. This provides great potential protection around our sold is 1925 and 1933. It's great support area, and market starts flirting with the MACD. If not today, but tomorrow, it probably will be some flirting around the MACD predictor, and once we get the Polish grabber, for instance, here, it might become the great background for a possible taking position on a daily chart with the stop somewhere below this area. So this is alternative way. This way, it's a bit more conservative. So will be some waiting for this, but it also carries some risk, because you do not know where you will take the position and what will happen. On butterfly trading, it is everything clear, because you know the invalidation points, you know what your loss will be, you could calculate the proper amounts of the position, value position. So, and that's actually the optimal point for making the decision. You should buy or you should not, that's all. All other parameters of the trade you do know. So it's mostly psychological choice, and you should act as you're more comfortable in the current circumstances. That's what we have on the gold. So let's see what the performance will be.